your first reaction to the numbers?
Well, clearly, I think that shall help to lift market sentiments. And as we, together with the streets, have been, I think, had another round of China growth downgrade in the past several weeks. So this is certainly good news with most of the numbers beating expectation.
Can China still maintain that V-shaped recovery? We have the likes of Goldman recently saying that, you know what, in 2022, we're looking at sub 5%.
We actually also lowered our 2022 forecast to 4.7%, really based on a number of considerations. First is the housing market likely continue to slow with a falling house price and the further weakening home demand, especially amid a looming property tax. Second is the zero tolerance COVID policy likely to stay until probably for the party's 20th Party Congress. And also, I think the government's green commitment likely to become more binding and facing more pressures to achieve this energy control target, which I think would imply growth to be averaged less than 6% two-year average. Yeah.
Jian, I'm looking at the fixed asset investment year to date, 6.1%. That was the slight miss here in this batch of data. Also, property investment for year to date, 7.2%. Also a miss and a moderation from the month before. Is this mostly weighed down by the property woes that we're seeing among the developers right now?
Certainly, I think the government's earlier tightening policy to rein in the markets have already started to bite in recent months, as we see falling home price, contracting home sales, and also the developers, because of this contingent effects from the Evergrande's crisis, and have been seeing with more funding pressures and also reluctant to bid lands and also cutting investments. So I think this situation is still unfolding.
Given that we're seeing these home prices as well, a second month where new home prices were on the decline, Jan, I'm just wondering, the consensus growth for this year is still 8.2%. Is that still achievable for China this year?
We think it's quite challenging for China to achieve 8%. Our forecast is 7.8. That being said, the latest upside surprise in particularly consumption and also industrial production, which I think partly boosted by the upside in export growth, shall help to lend some support to China's growth recovery. That being said, as I mentioned earlier, the downward pressures to growth is mounting, and the government, as we observing in recent weeks, have also started to announce more fine-tuning policies on the property sector.
When you take a look at the property sector, 25% of GDP, like you said, there's still so much uncertainty. Could that trickle down to the wider economy?
Actually, in our view, the impact of this falling home price and really would impact on real estate investment and also spill over to the upstream, downstream sectors. But that being said, we have long taken a view that the wealth effect in China is quite ambiguous. And you've not seen the Chinese households significantly boosted consumption on the back of surging home prices. In fact, most of the economists, including us, agree that the surging house price has been crowding out Chinese consumption. So I think we have to look at the impact of the housing slowdown via various, looking at it from a broader angle, and it's not similar as, say, the case of US or Hong Kong, where wealth effects have been quite significant.
Jen, we just got that PBOC here rolling over that 1 trillion renminbi MLF. What do you make of that? Is that a positive signal to you that they're staying the course, or is this means that this triple R cut, the chance of that is slowly diminishing now?
Yeah, I think they are staying course, and also they've hinted the less likelihood and low probability for triple R cuts, I think a few weeks ago in their press briefing. And in the way we can see that they are ensuring accommodative policy stance and sufficient liquidity, but mostly from rolling over MLF or open market operations rather than resorting to a triple R cuts. And also the latest kind of green financing tools, and also in a way I do think also reduce the probability for a near-term rate cuts, especially I think in the face of global stagflation concern and also the possibly faster Fed tapering or earlier than expected Fed tapering.
Jian, private-led investment has gone ahead of public sector spending. Do you see that helping to boost the economy, helping to support the economy going forward?
Sorry, can you say the question again?
Private-led investment, that seems to be leading ahead of public sector investment. Do you see that supporting the economy going forward?
Clearly, I think partly the government's hawkish policy on the property sector reflects their willingness to transform the economic structure and to encourage more high-end manufacturing investments, and also the property investments on the back of continued strength in Chinese exports and strong external demand, and shall help to support investment growth down the road, especially when we have a very sluggish infrastructure investment and also a slowing housing investment.